Ladies and gentlemen, good day and welcome to the Q1 FY’25 earnings conference call of Ceigall India Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddesh Dharmadkari from Orient Capital. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. I welcome you to the Q1 FY’25 earnings conference call of Ceigall India Limited. To discuss this quarter's business performance, we have from the management Mr. Ceigall, Managing Director, Mr. Punit Singh Narula, Whole-Time Director, Mr. Bhagat Singh, Group CFO, and Mr. Kapil Agarwal, CFO. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainty. For more details, kindly refer to the investor presentation and other filings that can be found on the company's website and stock exchanges. Without further ado, I would like to hand over the call to the management for opening comments, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Hi, good afternoon, everyone. This is Ceigall. I'm MD of the Ceigall. First of all, I would like to welcome you all to the first earnings call of Ceigall India Limited to discuss our performance on Q1 quarter 24. I would like to extend my gratitude to everybody who has taken out the time to attend this call. I would also like to thank every one of you for such an overwhelming response to our IPO. Your trust and belief in Ceigall has been instrumental in making this endeavor resounding with success. I have along with me Bhagat Singh, who's the Group CFO, Mr. Narula, who's the Whole-Time Director, and our Investor Relation Advisor, Orient Capital, to address these queries. Before I start with the business update, I would like to take this opportunity to formally introduce the company to all the participants here. We are an infrastructure construction firm specializing in complex structure projects such as long elevated roads, flyovers, bridges, railway overbridges, tunnels, highways, expressways, metros, and runways. As of fiscal 2024, we rank among the fastest growing engineering procurement construction companies based on the 3-year revenue compound annual growth rate, CAGR, within the segment of the companies with a turnover exceeding 1,000 crore. With over 20 years in the industry, we achieved an impressive year-on-year growth of about 43% for the fiscal 2024. We have experienced a 50% CAGR from fiscal 21 to 24. Over the past 2 decades, we have evolved from a small construction entity into a prominent EPC player, showcasing our proficiency in designing and executing all types of projects which comes on the road, including the specialized structures across 10 states in India. Additionally, we have been empaneled to participate in Delhi Metro Rail Corporation Limited in its upcoming tenders involving inter alia construction of railways, mega bridges, tunnels in India and abroad, and also with the public sector undertaking for bridges, highways, tunnel work in northern eastern states of India. Such empanelment is mutually extendable to the date. We have completed over 34 projects in the highway sector, comprising 16 EPC, 1 HAM, 5 O&M projects, 12 item rate projects. Presently, we are managing 18 ongoing projects, including 13 EPC projects, 5 HAM projects, which encompass elevated corridors, bridges, flyovers, railway overbridges, metros, tunnel, expressway, runway, and multi-lane highway. Alongside fulfilling our operation and maintenance obligations under EPC HAM concession agreement, among our notable achievements, we have completed 7 out of 16 HAM ahead of schedule and earned bonus for early completion on 2 EPC and 1 HAM projects. Our first HAM project, Malotpur-Sadawali, was finished 214 days ahead of schedule of its planned completion date. We have proven track record in handling projects of varying scales from 20 lane to 260 lane kilometer in length. As of 31st March 2024, we have constructed over 1,739.8 lane kilometers of road and highway, including the specialized structures. Additionally, as of March 31st, 2024, we have 1,488.17 lane kilometers of ongoing projects and completed 2,158.78 lane kilometer of O&M projects. In our industry, the order book value is a key indicator of the future performance. As of June 30th, 2024, our order book value stands at 9,470 crores compared to 9,225 crores at the end of the fiscal 2024, of which project awarded by NHAI constitutes of 80.31% of order book. We have recently received two new contracts. One is for Bhubaneswar Metro project worth 900 crores and development of Kanpur Central Bus Terminal, which is a PPP BOT project. LO is yet to be received. And our consistent order book growth is attributed to our extensive experience and dedication to maintaining high quality standards in the construction and project execution. We are committed to diversify our expertise and order book across various business sectors in EPC space and PPP and geographical regions. This strategy allows us to pursue a wider range of project tenders, thereby optimizing our business volume and profit margins. We are qualified to bid a single NHAI EPC project up to 5,700 crores, single HAM project value to 5,500 crores. Coming to the sector highlights and infrastructure development, India continues to be the fastest growing major economy with a real GDP of 160 trillion in fiscal 2023. It is projected to become the third largest economy globally by 2027. The infrastructure sector is pivotal, contributing 3.5% to the GDP, which with the investments in industry anticipated to reach 52,962 billion between fiscal 2024 fiscal 28. Road construction is a crucial component of the infrastructure development, driving economic growth and job creation. The 2023-24 budget underscores the government commitment to enhancing infrastructure through significant public investments. This initiative will be guided by PM Gati Shakti, leverage a multi-model approach. The government has identified 100 critical transport infrastructure projects with a total investment of 750 billion, including 150 billion from a private sector players. For urban infrastructure in Tier 1, Tier 3 cities, the Urban Infrastructure Development Fund has been allocated 100 billion. Additionally, the government has introduced the National Monetization Pipeline, NMP, and Development Finance Institution, DFI, to enhance the infrastructure financing. The National Infrastructure Policy has been unveiled, covering various sectors and regions with an investment target of 111 trillion by central and state government as well as the private sector during 20-25 FY. In conclusion, Ceigall remains dedicated to creating value of our stakeholders, customers and shareholders. We are confident that a focus on innovation, diversification and operational excellence will propel our growth in the coming years. Thank you for your support and trust in Ceigall India Limited. I'll now hand over the call to Mr. Bhagat Singh, our Group CFO, who will provide an overall overview of financial performance. Thank you once again. And lastly, I just want to add one thing. This is my first call, so pardon me for any mistakes. Thank you. Over to you, Bhagat Singh.
Our esteemed stakeholders, so at the outset, kindly accept my sincere gratitude on behalf of our company for attending this first call, post-listing or earning call on behalf of our company. So I'm grateful to Ramnik sir, our respected MD sir, for providing me this opportunity to explain the financial performance of our company with our esteemed stakeholders. So I would like to inform our respected stakeholders that the company, in line with the guidelines, we have already uploaded our results, financial results with the respective exchanges. And on this call, I will explain in brief our financial performance. At the outset, the first quarter performance of FY'25 was completely outstanding. The company has achieved a turnover of 822 crores, precisely as against the turnover of 650 crores during the corresponding quarter of the FY'24. Then the company has achieved a growth rate of 26.5% as far as the top line is concerned. And it is pertinent to mention here that the company has not only obtained the growth in the turnover, but this growth in the top line has been duly supported by the growth in the EBITDA margins. The company has achieved a growth of 65.10% in the EBITDA margins. In absolute terms, the margin has increased from 87.30 crore during Q1 FY'24 to margin of 144 crores in Q1 FY'25. In relative terms, this margin stands at 65.10%. This is a substantial growth in the EBITDA margins of the company, and this growth in the EBITDA margins has been duly converted itself into the growth in the PAT margins, which have increased by 76.5%. In absolute terms, we have achieved the PAT margin of rupees 77.90 crores as against the PAT margin of 44.10 crores during the corresponding quarter Q1 FY'24. So this is a brief about the financial performance, and this financial performance has been successfully enabled the company to provide the short-term and the long-term support to its resources which the company requires for its long-term sustainability. As far as the debt is concerned, so I would like to highlight in brief the debt picture of the company on a standalone as well as on a Concall basis. On standalone basis, the debt of the company stands at 629.70 crores. This comprises of 91 crores of equipment term loans, 393 crores of a mobilization advance term loan, and a working capital limit of 144 crores. So in totality, this loan stands at 629.70 crores. And I would like to make a specific mention of the fact that this standalone debt of 629 crores is on 30th of June. That is pre-listing. During the listing of the company, we have raised 413 crores of amount from the stakeholders for the repayment of a debt, which is a part of our primary issuance. Post-listing, the company will be utilizing, since the company has already been listed, so the company will be utilizing this amount which has been raised from the stakeholders for the repayment of a debt, and post the repayment, this number would be reduced by 62%. On a Concall basis, the total debt of the company stands at 1,195 crores, which comprises of 629 crores of a standalone debt, and balancing figures would be 400 crores plus would be in the form of a HAM term loan. The company has total 5 HAM projects as we speak, out of which one project has already been completed, which is with the name is Manot Above Sadhuwali HAM project. The company has also received early completion bonus from NHAI during this quarter amounting to rupees 17 crores, including GST. And apart from this project, the company's 2 more running projects are there for HAM. One is Bathinda Tabwali, which is 85% complete as we speak, and Jalbera, which is 63% complete. The company has already received annuity of rupees 90 crore on a gross basis from NHAI in respect of its first HAM project, that is Manot Above Sadhuwali. I would also like to make a specific mention of the fact that this HAM project, which has been completed earlier in case of Manot Above, this has been rated AAA by CISL, and overall rating of the company as we speak is A+ on a long-term basis and short-term A1 by CISL. As I move forward further, so this is a brief of a debt as we picture of the company. The net working capital days of the company, which was 45 days as on 31st March 24, they have been reduced to 38 days as on 30th June. This date has been calculated considering the inventory days, WIP position, debtors, and the vendor. On Concall basis, this number stands at 38 days. The company has a clear-cut good revenue strength and a revenue visibility in the future to come. And during this quarter, we have made a substantial progress in our financial performance. And we feel that this financial performance will continue to grow in the years to come, and the company would be able to get a strong internal approval to meet the long-term financial resources of the company. So thank you. I sincerely thank all our esteemed stakeholders, including our employees, business partners, vendors, auditors, bankers, for their wholehearted support in the long-term growth journey of the company. On behalf of the Ceigall India Limited, I thank everyone for attending this call. Now I request the moderator to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Rohit from Invest Analytics Advisory, LLP. Please go ahead. Rohit, the line for you has been unmuted. You may proceed with your question.
Hello, I am audible, sir.
Yes, you are audible, sir.
My first question is, what is the company's revenue guidance for FY'25 and EBITDA margin for FY'25?
So can you repeat? Your voice is not clear.
My first question is, what is the company's revenue guidance for FY'25 and EBITDA margin target for FY'25?
So the company has already achieved a significant growth in the past, and we expect that the double-digit margins that the company has achieved in the past, we will be able to continue to achieve the same during the current year also. And as we mentioned during the call, that the company has a healthy order book of 9,470 crores. So we believe that all the projects are at a good pace of their execution, and the company would make a proper effort to register the same level of a growth during the current year also.
Sir, can you share company's strategic outlook and key milestone expected 3 years down the line?
I request Ranjit sir to have a insight over it.
Can you share company's strategic outlook and key milestone expected 3 years down the line?
So, I have already, spoken about how and where we are. We are already present in more than 10 states, and we have about 10, 11 verticals with our company. And we are doing everything what comes on road. So, outlook, we are also looking forward to, country's growth. And with country's growth, like you can see, we have got metros of 3 different cities like Kanpur, Angra, and even Bhubaneswar. Our metro order book value has crossed about 1,600 crores. And another 35 cities, are coming up with a metro project. So a lot of projects will be coming in this space. And besides this, we are doing tunneling work, we are doing runways, we are doing highways, we are doing specialized structure, we are doing water sewage, we are doing solar for our internal projects. So I don't think going forward there would be any dearth of the work. And milestone, yes, you've seen a company's growth story before also. And we are targeting to grow organically. And going forward, I think we are a young company. I always say and use one dialogue is, sky is the limit for a company like us, and we are a young company. And after IPO, we are 2.0. So order book value, we had about 9,400 crores by 30th of June. But now with adding of these 2 new projects, which is worth 900 crores is of the Bhubaneswar Metro, which is going to start in another month's time. We've already started mobilizing on this project. And close to 150 crores is a Kanpur bus terminal. And besides this, we have quoted projects worth 12,000 crore. And like I said, we are present in more than 10 states. A new state is added with this Bhubaneswar Metro, which is Odisha. And our company strategy is very clear. We want to maintain our EBITDA margin of 2 digits. So for us, going to any state is not a challenge. And outlook is great. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Yeah, thank you so much for taking my question. The only question I had was on NHAI bidding. We've seen that NHAI bidding last year was muted, and that was mainly because of the impending budget and the election. But my question would be, how do you see the NHAI bidding picking up in not just this year, but the next, say, 1 or 2 years to come? And what do you think, from your perspective on this industry, how do you think NHAI is going to play out?
So thank you so much, Nidhi, for the question. NHAI has cleared some projects worth 55,000 crore. It was very well, by NHAI also it has been given as a press release to the various newspapers and other mediums also. So we have today also quoted a project for about 20 to 2,300 crore in NHAI. What I want to tell you is that NHAI will be maintaining what they've been doing because, they have built so many highways. So maintenance, O&M work will be a lot. And number 2, they have to build the balance projects also. For an example, we are doing a project of Varanasi, Kolkata. So there are still projects balance with which only the expressway will be completed. So there are many expresses in the country which are yet to be completed, and those projects are yet to be out. And O&M again is on a higher side. Besides this, if you see, we have entered into metros. We are doing work for ADB. We are bidding a lot of work in ADB. We are doing one project already in Bihar for 781 crores. And we are diversifying into water irrigation projects also. We have quoted for a STP plant in Jharkhand, which itself is a large project, more than 1,000 crore in HAM. So for us, the companies which were in the NHI, when they go up to the level of 6, 7 or 8,000 crore, they start making the verticals then. We have started making our verticals when we were only 2,000 crore. And that's the reason we already have 10 to 11 verticals. And not only that, we are present in more than 10 states. If you see other listed companies, they've restricted themselves to certain states. But whereas with us, there's no restriction as such. So we don't see any dearth of work. And, if you see, we were doing only EPC work in Ceigall. And we started doing HAM only because, we always wanted to have a vertical in the company that agar aaj EPC mein kaam nahi mil raha, so we are getting work in HAM. Now, if there was some delays in, awarding the projects from NHI or tendering, we went into metros. And we already doing a tunnel also. So for us, we have so many verticals, and geography-wise also we are spread in so many states. So getting new order book value will not be a challenge. Thank you.
Thank you so much.
Pleasure.
Thank you. The next question is from the line of Vaibhav Shah from JM Financial Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, when do we expect to receive appointed dates for VRK 11, 12 and Delhi Amritsar Katra?
Hi, thank you for the question. So VRK 11 and 12, for package number 12, what we anticipate 50% land is available. Only and only land is available, just a forest approval which is required. I think it's really on advanced stage. We are expecting that by October, package 12 should be cleared. So that, in next quarter, the work is started. And in terms of Delhi Katra, yesterday also they tried taking the possession, and there has been little resentment by the, farmers. But still, government is very positive, and they are still trying to get the possession. But the good thing is, Bhubaneswar will start in a month's time. Thank you.
Okay. Sir, what about VRK 11 in terms of AD?
So it's the same position. VRK 11 and 12, the land is there. Only and only the forest approval needs to be done because forest ka diversification is there. They have to divert the land for the forestation. So, last week also, a great discussion has happened between Gadkari Sahab and the environmental minister, and the things are very positive. So I think very soon it will be there because it's not only two projects, it's almost the entire expressway which is held up only for this decision. And from our side, everything is done. If you see, our agreement is signed, our FC is done, and we are ready to go in terms of mobilization and starting the work. Our design is also done, in fact. In fact, we have submitted a plan and profile also. Thanks.
So, sir, in VRK 11 also 50% land is available currently?
So, land, in both cases, land is available. 50% land in 12, what do I mean to say is that usme forest nahi hai. The rest of the land, the forest is there. And once the forestation issue is solved, which I think will be solved very soon, then the work will be started. Because, the region is good, wahan material ki problem nahi hai. There's a lot of cutting there. So, we are really expecting that jaldi shuru ho jayega.
So for both, we can expect sometime in 3Q for both execution should start or AD should come in for both the projects?
We are very positive about it.
Okay. So secondly, what would be our equity investments for 25, 26, 27? So what is the currently outstanding requirement and the investment we are targeting in 25, 26 and 27 for the HAM projects?
Good question. First HAM, the equity close to 100 crore has already been infused. Usme, so, we've achieved the pre-COD and we've already received the 2 annuities and that project is AAA rated. The second HAM, 100% equity infused. That project is about to be completed in a month's time. So in that project also, we should target to get the COD by October, and that project will be completed almost 9 to 10 months ahead of schedule. First HAM project, we have taken a bonus of 8 months. In this, we are targeting 9 to 10 months of the bonus. Third HAM project, 50% equity is infused, which is about, I think, 45 crores. And the project will be completed around March. So that project also will be completed before or ahead of schedule. So that project hardly 40 crores or more of the equity has to be infused, and that will be infused during this period. Now, besides this 11 and 12, once they start, of course, it will be, we have to infuse according to the project tenure, which is almost about 30 months. Over 2 years.
Okay. And so what was the mobilization advance as of June 24?
I think Bhagat will be the right person to answer this.
Yeah.
Hello?
Yeah, please go ahead, Bhagat.
413 crores.
I didn't remember. 413. 413.
Yes. Yeah.
And sir, what was the same number as of March 24? As I'm asking for on the standalone books.
So you're asking for the standalone books. So standalone books,
yeah.
Yeah, so it would be 393 crores on June 24 and 259 crores as on March 24.
Okay. Sir, lastly, what would be our revenue and margin guidance and order inflow guidance for FY'25?
So, Vaibhav, I just would like to reply to the first part question again. So whatever number I have quoted to you as on June, so I repeat what I replied earlier also. These are the numbers before listing. So during listing, we have raised 413 crores for the repayment of our debt. So once this payment has been done, which has been significantly done already, and I think by the next quarter, so this number of total outstanding of debt, it would be reduced to a major extent of 62%. Post that, the debt equity ratio would be at a very, very respectable number. So this is the completion of your first query. Number 2, you asked me about the revenue and EBITDA. So as I already replied on a call, the company has, on the basis of its present order book, have already achieved a significant benchmark in its top line in the previous years. We are expecting to achieve the good revenue number this year also with the same growth rate. And as far as the EBITDA also, the company has achieved an EBITDA between 13 to 15% during the past few years, and we are expecting that the present ecosystem of the resources, material, financials, and the technical team. So we feel that the present order book, the works which are already started and which we are expecting to start, the execution of these projects will deliver the same level of EBITDA within this range only.
Okay. And sir, last question from my end. In the bonus you received of 17 odd crores, what was the GST component?
Just a second. Just allow me 1 minute. In this June quarter, no, it was 18%, and in absolute term, it was 2.59 crores.
And it was entirely passed through revenue, even the GST part.
Come again?
Even the GST was passed through revenue, GST portion of 2.59 crore?
No, without GST.
Achha,
including GST.
Yeah.
Thank you, Vaibhav.
Thank you, sir.
Yeah. Thank you.
Thank you, Vaibhav.
Thank you. Ladies and gentlemen, if you wish to ask questions, you may please press star and 1. We have the next question from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, right. Thank you for taking my question, and congratulations on good sales numbers this quarter. Sir, if I refer your presentation, I've seen that we already have one project, hybrid annuity, which is operational, and you said, there will be one more which would be operational by October, and then the third one will be operational by March 25. So by this year end, we would have 3 operational assets. So what's the idea with these assets? Do we intend to own these assets till the time the concession is exhausted, or would you be willing to go and offer these assets? If there's a taker in the market, and then get that money back and try and look for more growth opportunities.
Thank you so much for this question. And Prem, we are very clear with the thought process. Whenever we get a good valuation, we want to sell it, but only thing what we look for is we should have an opportunity to put this money somewhere. If we have a project where we can put the equity, because we are getting good IRR there. Like for the first project, our equity IRR is close to 20%. अगर उसको बेचते हैं, we have a lot of offers from InvIT and from other players also in the market. So when we sell it, तो क्या करेंगे उसको FDR में डालना पड़ेगा. इससे better है कि we just wait for the right project. Once we have the project with us, we put that money in that project so that again the great return on equity can be achieved.
Sure. So essentially, whenever it requires, you would be open to kind of consider selling. Okay.
100%. Our model is asset-light model. If you see our company, overall we work with the asset-light model.
Sure. And sir, if I look at our order backlog today, it's skewed in favor of the EPC vertical at this point in time. But the way, if you look at the way NHAI has been kind of guiding, it seems as if hybrids and BOTs would be a much larger part than EPC going forward. BOT would make a comeback. So would you be open to kind of take this number up? Currently it seems as if 60% of our order backlog is EPC and the balance is hybrids. But if it is required, let's say you require to kind of go and try and bid for BOT doors because the NHAI would try and give out more of BOTs going forward to optimize their resources. Would you be open to kind of consider BOTs, take traffic risk, inflation risk, or you would, look to diversify into newer segment, even if it requires you to settle for a little lower in terms of margins, but then the idea would be to have more of EPC than the asset ownership orders?
So, good question again. We are always open for HAM because HAM is tried and tested. For HAM, if ever we require equity, we already have completed projects are getting completed. So equity is not at all a challenge. And number two, for BOT, we are a little conservative. We have just already in discussions with some large companies who wants us to execute their EPC in that BOT. And if they want us to put some part of the equity, which is very negligible, we are open to that because, eventually, if the project is good, where the project IRR is good, and we feel that the toll collection is already getting collected, or a project where the project of 4 to 6 lane is to be done, or 4 to 8 lane is to be done, 6 to 8 lane is to be done, and the toll is getting collected, where we feel the numbers are intact, then we can think of, planning something, doing something. But again, I want to repeat it, we are very conservative with BOT. HAM, we are very, very okay. And EPC is to like a baby. So that's what I want to say. Thank you.
Sure. Just a small clarification. This hybrid annuity set, Ludhiana, but in the Moga Barnala. We won that project in 2021 and we've still not been able to manage appointed dates. So any thoughts there? Would you want to retain this? Or
I tell you, Bathinda Diwali was allotted to us. The tender happened in 2020. So it started after 3 years, and the minimum escalation was about 23%. And now the project is about to be completed in almost a year's time. So there is nothing to lose. In Ludhiana, Bathinda, the problem is there of the farmers in Punjab. And Ludhiana, Bathinda department is still trying that we should get the possession and start the project. Today only I spoke to the team. They said demarcation is happening. And about 11 kilometers they are targeting to get possession also. So, we are after it today also. When we had a discussion, the escalation is close to 16-17% that project. So we have nothing to lose. If the project gets started, it's a great project. So, we always look forward and positive that the project chalna chahiye. The last thing is ki nahi chalega to we can terminate it. But why? Let's wait. We have nothing to lose because, Punjab is so strong. हमारे वहाँ कैंप भी लगे हुए सब कुछ है. We already doing Bathinda Diwali, so we have nothing to lose.
Sure. And sir, all of this 9,000 crore rupees sort of order backlog that we have, how many of these projects or how much of order backlog is eventually wherein you either awaiting appointed dates or FCs pending? So 3 hybrids is wherein we're waiting for appointed dates clearly, which is what is visible in the presentation. Do we have any projects on EPC side wherein we're awaiting appointed date?
EPC only, this Delhi Katra project is awaited, which is part 2. Otherwise, EPC currently sab chal rahe hamare.
Sure, sir. Okay, sure. And that's it from my end, and all the very best for future.
Thank you so much. Thank you.
Thank you. The next question comes from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes. Go ahead. Hi.
I wanted to ask you, out of the total receivables of 430 crore on the books, how much of them are from Punjab?
Bhagatji, can you answer? Can you understand what he's saying?
Yeah. So I understand. So state-wise, it is tough. So I can answer you this way, that total receivable which is being reflected on a standalone basis, the debt amount is 442 crores as against 469 crores. So this is a debtor receivable from the normal execution of a work. So if you want me to work on an approximate basis, so it could be like 40%, so close to 200 crores, right? Because this component is from the execution of the work under the different region.
Understood. So what you are saying is, out of 442 crores of receivables which we have, out of that 200 crores are outstanding from the Punjab government, right?
We see the classification in the balance sheet is either on a stand or console basis. So I don't have a region-wise exact number. So considering the order book number, what I'm saying is whatever works we are executing. So on that basis, tentatively the numbers revolve around this number.
No, I actually wanted to know how much of our payment is outstanding from Punjab government specifically.
No, so I think, Bhagatji, let me speak. Punjab government, there is no payment as such due. Because, we don't work for the state. It's only national highway projects or a runway by MES where we are working in Punjab. And our order book value is on a lower side, less than 30% in Punjab.
All right. So the payment is going to come from central government, right?
Central government, yeah. There would be some small awards by the state government where, it'll take time, but yes, we will get it. We have won some awards.
Understood. Okay. And sir, how much is the outstanding bid that we have done till date?
About 12,000 crore.
12,000 crore. And how much would be our bid to order book conversion?
So it's 3.1x.
3.1x. So in FY'25, you are expecting an order inflow of around 4,000 to 5,000 crore?
You're talking about the new tenders?
New tenders, yeah.
Yeah, we've already got more than 1,000 crore in this year. And yes, our expectation is there. And I think we've already quoted 1,000 crore. Is reasonable number, what you're saying. But looking forward for good results, or maybe more than that. So just waiting for the good results.
So it would be around 5,000 crore plus.
So, see, we can never have this thing in our mind ki itna kaam lena hi lena hai. What we have to see is getting tenders on our EBITDA levels.
Yeah.
हमें minimum इतना पैसा धंधे में बनना चाहिए. That's more important for us. Bidding का क्या है? Bidding 12 नहीं 20,000 crore की कर देंगे. We have spare BGs, we have spare surety bonds. But धंधा पैसा बनेगा तभी फायदा है ना.
समझ गया. और सर ये जो आपने इतनी बिड की है, तो ये अगर हमको ऑर्डर पर आएगा तो ये इस पर कितना हमारा एबिटा छूटेगा?
नहीं, ऐसा तो बताना मुश्किल है. बिकॉज इवेंचुअली क्या होता है, हमारा सिस्टम क्या है. फॉर एग्जांपल कोई टेंडर हमने बिड किया है कि हाँ ये टेंडर हमने लेना है, कि ये टेंडर हमारे काम के साथ चल रहा है. सो मे बी वी कैन बिड इट एट 14% बेटा, कि बिल्कुल साथ में, बिकॉज आवर एक्सपेंस विल बी लेस, वी कैन कन्वर्ट एंड मेहनत करके उसको बढ़ा सकते हैं. Then we have more work in that area, or maybe we have more work, we can increase the beta to 15 to 16%, also even to 17%. So it depends upon the time we bid. It's not this. What Bhagat clearly said, we want to be in the same pedigree where we have been doing in last 4-5 years.
Understood. And sir, our current EBITDA, as we closed in FY'24, it was 17.09%. So are we going to continue the same level of EBITDA in FY'25 and FY'26?
We are definitely going to try and achieve that. And of course, we have great teams. We have great financial execution teams also, besides the site execution. So the entire teams are working and doing best.
All right. And sir, if I compare 23 and FY'24, So your sales growth was around 40% or something. So you are expecting a similar growth in FY'25 as well. So it would be around 4,200 crores of sales in the, yeah.
So we are very conservative with the numbers. We speak less and we deliver more. So, it is better that you've seen our first quarter results also. And we are really looking forward to achieve maximum and let the natural growth or organic growth have its own picture. And of course, we're looking for best results.
All right. And sir,
Yes,
overall,
sorry to
how
interrupt,
much is
sir. We request you to please rejoin the question queue for follow-up questions.
All right. Okay. All the best. Yeah.
Thank you.
We have the next question from the line of Ronald Sioni from Ceigall Limited. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, if you can highlight, of the 12,000 crore, what you have bidded. So any segments in terms of, roads or metro projects. Even if you can help us.
I thank you for the good question. I think you were saying something. Sorry, please repeat, then I'll answer your question.
Yeah, so apart from these segments, also in terms of client-wise, NHAI orders or MORTH order or, other state or PWD orders.
So, I'll just answer your question. We have quoted this 12,000 crore, which is the mix of MORTH, NHAI, airport, metro, and even the STP plant. We generally don't bid for state government till the time it is funded by ADB, World Bank, or centrally aided projects. We work majorly only with the center government projects, where we feel the payments are, 100% secured. And, we've been bidding for about 10, 11 verticals, including tunneling. It could be a railway. We have quoted for a railway project also, the Haryana Orbital. We have quoted for 2,000 crore project there also. So it's a mixed bag of all these verticals, and it has nothing to do with the state government as such. Because state government, as I said, we don't work till the time it is funded by ADB, Asian Development Bank, World Bank, or centrally funded projects. Or they have a reserves in their thing. Otherwise, we don't bid. Thank you.
So NHAI still would comprise around 75 to 80% of this orders you have quoted, or it will be lesser?
So it will not be appropriate for me to answer the exact numbers, but yes, it should be around 50% NHAI MORTH, rest would be from other verticals.
Okay. And what are
numbers?
Yes. And what would be the fund-based and non-fund-based limits, and how much you have utilized till date?
Excellent question. Here we Bhagat ji आपका answer करेंगे. Bhagat ji, please answer, reply.
So, as of now, as we speak, so we have a fund-based limit of 300 crores, against which our utilization was only 144 crores. So, and as for non-fund-based limit, our utilization was 629 crore as against a sanction limit of 1100 crores. So, this is the running limit of the company, and the BG limit which the company is utilizing. So, so this is one of the best limit, and the company always tries to maintain minimum utilization of the BG limit. And the reason and why the company is successful in maintaining this number at a lower level was the company tried to make a perfect ecosystem of execution, and on account of early completion of projects, the company is able to get the BG release from the authority since the project was completed, and it will enable the company to lower its utilization as far as BG limit is concerned. And this limit is, the company is maintaining this ratio since last many years.
And lastly, on sir, this equity investment, say, if I calculate for 5 HAM projects, around 900 crores of equity requirement would be there, and so around 300 crore per annum would be required, say, per annum for the next 3 years. And your operating cash flows would be in the range of, 200 crores, so higher than 200 crores at least. So, the 100 crore additional, how you would be able to fund it, or if you can highlight whether you would be taking up some debt going ahead, or this is the peak debt after paying off your BRC at currently.
So, sir, there are two ways, or we need to look at this picture in a very explain you the entire picture, how you need to look at the equity commitment of the company. So the company has as we speak, the company has 5 to 6 HAM projects. The company has already invested in the equity projects which have been completed. So as Amit sir has just mentioned on the call, in Manor Tabor project, which has already been completed, the company has already infused the equity. Number two, in Bathinda Dabwali, which is running at 85% complete, the company has already infused the equity of rupees 84 crores. In Jalbera Shahabad HAM project, which is 65% complete as we speak, the company has already invested 55 crore as against the required desired amount of 85 crores. So in totality, rupees 240 crores have already been invested in the HAM project which are running. So only an equity amount of 30 crore is required to be pending in Jalbera HAM project, which will make the equity complete. So if you ask me, apart from these three, I need to infuse a 490 crore of HAM equity in the Varanasi Ranchi HAM projects, both of the HAM projects put together. So 490 plus 30, it will make the total picture to 520 crores. This is the amount of equity which we need to infuse in the HAM projects which are existing as on date. And one more thing which we need to understand. As per the financial closure sanctions which we have executed, this equity of 490 crores is required to be infused in 2 financial years. And 50% needs to be infused in the upfront as and when the appointed date is issued by the authority. Maybe remaining 50% will be in the next year in line with the debt equity requirement. So this is the first part. So if we divide 490 into 2 parts, so you will realize 245 crores would be in the first year. First year means, as the management has just guided, we are expecting the Varanasi Ranchi project appointed date to be released in the third quarter. So from the financial year, December 24 till December 25, the total equity requirement would be 245 crores put together in the 2 HAM projects. And in the next year, from December 25 to 26, another 50%, that is 245, needs to be infused. This is the first part. Now, sir, what needs to be understood is, company have a healthy cash accruals from operations, and it has been proved in our balance sheet also that the company has also existing unencumbered NGRs in the bank, which the company is constantly building up to infuse the equity in the long-term HAM project. Another important point which will support my answer to your query is, during this current IPO also, the company has been successful in raising its IPO, and we have 140 crores of amount which is utilized, which is named as a GCP, with the SEBI permits to be utilized for any purpose. So this is another question which is available for the company to be utilized for its long-term resources. Whenever the company invests or bid for a HAM project, it is a part of a bidding strategy of the company that the company give a due emphasis on the long-term resources available with the company and how the company is going to fund its equity requirement. And the long-term resources includes the internal accruals, which are very healthy in the company, and you can also very well check and examine that the EBITDA margin of 14 to 15% is converting itself. 60% of the EBITDA is converting into cash profits, which is ultimately supporting me in maintaining and earning healthy cash accruals. So unencumbered balances, GCP portion, as well as unencumbered FDR, all these put together are sufficient enough to infuse the equity commitments of the existing HAM projects.
I'll just add one more thing. The completed projects can be sold anytime. We don't sell it because we don't have as such any requirement, because these projects are churning good IRR on the equity. We have opportunity to sell these, raise money against NCT bonds, or even refinance, or even selling this to the InvIT. So on the 300 crore equity, we can encash that equity with a good multiple. So money required for the equity for these new projects is not at all a pressure. Thank you.
Great, sir. And just one last one, if you permit, sir. On the interest side, like what kind of interest expense you are estimating for FY'25 for the full year?
Bharati, answer?
The interest expense in terms of percentage?
Absolute term, how much interest outgo you should expect for FY'25 as you have paid off a significant amount of debt?
Sir, we are expecting that the company, as in the IPO itself, we are paying 413 crores of a debt from the IPO proceed. So we are expecting that the finance cost would be kept at a very minimum level during this financial year because number one, the significant of our debt would be repaid through IPO proceed. Number two, since the company has now been listed, so company would be going to get the benefit of the reduction in the financial cost, both in terms of the fund-based limit as well as in terms of the non-fund-based limit. So the financial arbitrage benefit which the company is going to get, it will be able to support the company in the financial cost reduction from 70 basis point to 1%.
Okay. Any absolute amount you want to quote?
So it's not, since we are sitting in the first quarter, so for giving an absolute for the entire period, so it would not be wise enough because it depends upon the appointed date of a new project which may be allotted. So, but general guidance we can give as a secret.
Okay, no problem. And thank you very much, sir, and best of luck.
Thank you. Thank you.
Thank you. The next question is from the line of Pranav from Pink Wealth Advisory. Please go ahead.
Hello?
Sir, you are audible. You may proceed.
Yeah, I just had a couple of questions. Sir, firstly, we have seen some comments and news coming from the ministry that there have been certain parties which have been opposing the Punjab projects. There are certain talks of termination of the highway projects in Punjab. Could you throw some light on how that will affect us?
So, good question. Farmers are not letting the work to be executed in Punjab. So, we only requested the minister and everyone, including GR, us and other listed players, that either the site is to be given clear to us, otherwise we need to take termination payment from NHI. We hardly have two projects there, which is hardly any impact to us. And if NHI doesn't provide us the land, they have to pay us the termination payment. And our order book value is hardly, it is under 30% from Punjab. We have more work in Jharkhand than Bihar now. 3,000 crore almost is from Bihar, almost 2,900 crores is from Jharkhand. And as I said before, we have added 3 cities and 1 new state in terms of the metro. So that way, we are very prepared. Punjab is a little tough cause of the farmers, and they're taking the money also from NHI and not giving the possession. That's the situation, and no contractor wants to sit there and wait.
Got it, sir. Got it. And secondly, so there were some talks about that we have our own internal IRR percentage that we like to maintain before we are thinking of selling away project. What is that IRR number?
Raji, so you want to answer or I should answer?
So nobody says as you wish. Sir, you can answer. I can.
Go ahead.
So, sir, internal IRR number, if I'm correct, so you're talking about a HAM project, right, sir?
Yes, sir.
So in a HAM project, so we are maintaining a good IRR with 17% plus. So as Mr. mentioned, so the company wishes to continue to earn the same IRR till the time there is a cash flow requirement for the company which can be met through monetization of HAM project. Till that time, the company wishes to earn the same across the HAM project. It varies from HAM to HAM, but on an average basis, the company tries to maintain a good parity between the EPC and the HAM margin.
Got it, sir. Perfect. And one last question. So we have already bidded for around 1,200 crore projects. So are there any further pipeline that we're expecting from NHAI or Metro?
Hi, thank you, Pranav. We have quoted for 12,000 crore. And we have a great pipeline ahead, and a lot of bidding is happening on weekly and monthly and even day basis also. So there is no dearth of the work, and we've been bidding through and through. Thank you.
Got it. And so lastly, I heard that our conversion is 3.18. Is that correct? The conversion ratio is 3.18.
Oh, no. So conversion is the order book values are to turnover. Like for example, 3,000 crore has a 9,400 order book value. Right? Conversion, we don't work or bid for any conversion. We bid for our EBITDA levels.
Perfect. Got it, sir. Yes. Thank you so much.
Thank you, Pranav.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to Mr. Siddesh Dharmadhikari for closing comments. Over to you, sir.
Thank you. I would like to thank the management for taking this time out for the conference call today, and thanks to all the participants. If you have any queries, please feel free to contact us. We are Orient Capital, Investor Relations Advisor to Ceigall India Limited. Thank you so much.
Thank you. On behalf of Ceigall India Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.
Thank you.